From the trading desk of dailyforex.com, this is Christopher Lewis looking at the upcoming June 21st Forex session. In front of you is the Euro USD pair, and one word of warning ahead of time: it is quadruple witching in the United States, which essentially means that a lot of different options markets are closing or expiring, I should say. Contracts are expiring at the end of the day, and therefore you have a lot of reshuffling of the deck, so to speak, in the markets late in the afternoon. So we could see some really strange price action at the end of the day, and a lot of times it's very volatile. You see it just if you ever watch it on a short term chart, and I do not recommend trading it, but if you ever get the chance to watch it, it's very interesting to see how the markets just gyrate wildly. That being said, at the end of the day, could be a little bit skewed. But taking a look at this chart, I'm trying to read out a few days here, and what I have seen based upon the action that we saw on Thursday, we did see a sell off, and we saw the dollar gain against just about everything out there. That includes commodities, stocks, euro, other currencies, you name it, it pretty much happened. I should state that this is a weekly downtrend line that I've been paying attention to. It does touch a little closer than that. This is part of the MetaTrader 4 glitch when you switch time frames. But having said that, the weekly downtrend line is significant, and we sold off. This was a nice sell signal. A breakdown below that, we really kind of accelerated, and what we ended up doing was essentially, at least in my opinion, possibly, and it remains to be seen, but it looks like we might be trying to set up a little bit of a trading range. And you'll see this time and time again in the pair, because as I draw these rectangles, you can start to discern that, hey, this happens again and again. And it's a little messy down here, but you can still make an argument for something along the lines of that. So you can see it's like a high rise. We're in one floor, we go to the next, and then the next. I also have the 50-day moving average. It is just below. We bounce from just above it. It actually lines up perfectly with the 34 EMA, which is a Fibonacci number. Some people use it. I don't know that it carries that much weight, but it's just something worth mentioning. But looking at the chart, you can see that we did bounce from the 132 level and just a bit below, and that's really what matters. I think what we're going to see here is we're going to see a bit of consolidation. I am not comfortable buying this pair for a couple different reasons. Number one, we are still in a downtrend. Regardless of what's happened, we are still in a downtrend. We need to clear this line to make the next significant move higher. We've only got about a 200 pip range at best, and although certainly that's enough to trade short term, you also have to worry about 133 because it was support previously. So will it be resistance going higher? It very well could be. We don't know. So a lot of choppiness could happen. Looking at this chart, I think it's easier just to sell towards the top of the consolidation area and grind away. I also feel that this is probably going to be the summer range, or at least for the short term. But ultimately, I also believe that this pair is going to fall because of not only the downtrend line, but more importantly, the Federal Reserve is looking to exit the quantitative easing game. At the same time, the ECB finds itself in a situation where it's got a very moribund economy in the European Union, and as a result, it may have to stimulate. That should contribute to raising interest rates in the United States, falling interest rates in Europe, and ultimately that should weigh upon this pair. We'll have to wait and see, but right now, in the short term, to me, if I had to say what's going to happen in the next day or two, I think we're going to get a little bit of a boost. But I also believe after this sell off, a sell off like this, breaking several wicks in a row like that, that's not an accident. Even though we have a hammer-ish candle form for the day, I still believe that there will be nice selling opportunities above. So personally, I am sitting on the sidelines looking to sell on signs of resistance on the shorter term charts. Again, though, if we break above the line, fine. I'm wrong. I've paid my a little bit of my account for the information, and then I know that longer term we should continue to go higher. Right now, I don't see that happening. I think there are far too many headline risks out there. And then obviously, if we break the bottom of this candle, that is a pretty bearish sign as well.